and gentlemen, welcome back to the channel. Big tech earnings are out. The de-risking or uncertainty is upon us. In this video, we will be talking about these earnings, what was said, and what is next for markets. Okay, I've talked about this for a couple of days now, but Jerome Powell was a little bit more, I guess, hawkish than expected. How does that, mixed with the now new information from earnings, change the setup for stocks over the next 3 months? Okay, should we still expect an end of the year rally, or is all hope lost? We'll get into that in today's episode. Hit the like button as well as subscribe to the channel if you have not done so already. And let's get started. Oh, and by the way, we have some big headlines coming out of China soon, because China is 12 hours ahead of us. So Trump said he will be meeting with the Chinese president on Thursday. I'm assuming that's Thursday China time, right as we speak. If it's, 8 p.m. or 6 p.m. when this video comes out, it is 6 a.m., 8 a.m. over in China, which we might start to get some of the headlines from the Trump-China meeting within just the next couple of hours. So that's going to be a big deal, and we'll talk about what I'm expecting to hear and how that could also impact markets. Okay, so first things first, you have Meta here. EPS came in at $1.05 versus $6.03 year over year. Revenue at $51.24 billion, estimate $49.59 billion. So miss on EPS, a huge miss on EPS. We'll explain that here in just a moment. Revenue came in much better than expected. Advertising revenue, $50.08 billion, estimate $48.59 billion, so much better. The family of apps revenue at $50.77 billion, beating estimates of $49 billion. Reality Labs revenue $470 million, estimate $317 million, so that's actually a huge beat. The operating income from the family of apps came in at $24.97 billion, estimate $24.79 billion. Operating income came in at $20.54 billion, up 18% year over year, and they see Q4 revenue $56 to $59 billion. The estimate was $57.38 billion. So a little bit lower on the low side and a lot higher on the high side than Wall Street was expecting. Overall, it was pretty good. Now, Meta says there's a $15 billion one-time non-cash adjustment from a tax, essentially, bill, okay? So that's where the EPS got killed. But is it really a miss if it's a one-time non-cash adjustment? Not really. Microsoft Q1 2026 earnings, EPS at $3.72 versus estimates at $3.67, better than expected. Revenue at $77.67 billion, estimates $75.55 billion. Intelligent cloud revenue at $30.9 billion, beating estimates of $30.18 billion, with total cloud revenue at $49.1 billion. Azure and other cloud revenue, excluding FX, up 39%. Versus estimates of 37.1. So looks like AI, cloud, data center, intelligent cloud revenue, better than expected. So the AI story alive and well at Microsoft. Now Google was apparently the big winner today. EPS at $2.87 versus estimates of $2.26. Revenue at $102.35 billion. The estimate was $99.85 billion. The first time ever that Google has surpassed $100 billion in quarterly revenue. Revenue excluding TAC, $87.4 $85.47 billion, estimate $85.11 billion. Google services revenue $87.05 billion, estimate $84.67 billion. Google search and other revenue at $56.57 billion, estimate $54.99 billion. YouTube ads revenue $10.26 billion, that even beat estimates of $10.03 billion. Google ads revenue $74.18 billion, estimate $72.46 billion. Google Cloud revenue $15.16 billion, estimate $14.75 billion, so that beat as well. Operating income at $31.23 billion, estimate $32.11 billion. CapEx came in at $23.95 billion, estimate $22.38 billion. So they raised CapEx guidance as well. Now, the biggest loser today following these earnings is Meta. It's really from that one-time cash adjustment. With Meta stock that sold off about 8%, the biggest winner was Google, up over 5%, and Microsoft kind of in the middle, but down about 3%. This is pushing the S&P down 0.18% in after-hours trading, but it really doesn't matter, okay? And I'll explain why that is. But the AI story is alive and well. Now, specifically the area that I've been most bullish on, small cap AI. You can see the Russell is up 0.04% in after hours. Again, not really as impacted from the hyperscaler earnings. The one thing that really mattered most for this market was AI. And when it has to do with hyperscalers, sure, people are going to react to the numbers when they first come out. Did these companies beat? Did they miss? Did they raise guidance? Blah, blah, blah. But what these companies had to say around AI was all positive. They're spending more. They're doing more in AI. That did not change at all from these earnings. Now, Jerome Powell today threw a little bit of a monkey wrench into things, but I don't think it's ultimately going to matter either. Now, in other news, U.S. Senate Leader Schumer and other Democratic senators urged Trump not to lift restrictions on AI chips and American tech in pursuit of a China trade deal. Just to give you a little bit of a heads up on what some of those headlines might look like. Trump and China getting along a lot better. And that is going to be the big driver of this market, in my view. You can, even if you wanted to assume that earnings were neutral, that Powell was pretty neutral overall, we're going to talk about it in just a moment. China Trump headlines are really going to dominate over the next 12, 24 hours and probably for the next couple of months. Now, Jerome Powell today really shocked investors. It's not a big surprise that Jerome Powell said, hey, if things change, what we do will change, okay? This is not really a shocker to anyone. This is how the Fed operates. Sometimes they're data dependent, other times they're not. The Fed chose to be data dependent in their forward-looking statements today, okay? It's the new Fed we live in. It's a wild card, okay? But we can always assume that if the data changes, the Fed will change. That's what they said today. The Fed did not say that anything changed. The Fed said, hey, if something does change, our outlook might change. That was already very well understood by markets. It sounded bad to hear it, but did it change anything? No. It puts a little bit more of an importance on any data that we get, any insight we get, what Trump does with China. For an example, Powell basically said, if tariffs go up or stay in effect, it's going to change how they are viewing inflation pressures, and future concerns. If Trump lowers tariffs on China, well, that, in a bullish way, changes how the Fed is going to look at China and look at the tariff inflation situation, okay? Which is really non-existent at this point. When you want to boil down Powell at the end of the day, nothing changed. Powell just reaffirmed that we're not on a preset course, which most people, like should already know that. So nothing really changed today from Powell. Now, you can also make an argument that Powell doesn't matter too much, okay? Because Powell is leaving in the next couple of months. You even had Michelle Bowman today that said maybe Bessent needs to step in and take over at the Fed because Powell has lost his grip. Sounded like the Fed meeting today was pretty heated, to say the least. And the Fed meeting over the last 2 days was probably quite heated as well. So Powell, really a non-event, although it came across as kind of a knee-jerk. Nothing changed today with the Fed, okay? Earnings from big tech show that the floor is not falling out from under these companies, as maybe some investors were hoping for. AI is alive and well. It's booming, in fact. And there's no slowdown of AI investments coming anytime soon. Now to really the big catalyst that is coming over the next couple of hours. That is what Trump and China are going to agree on. Remember, just a couple of days ago, it was reported that top trade negotiators from the US and Chinese side came to pretty much an agreement on a trade deal, but it needed to be finalized by Trump and China. We never got the details of that. We don't know what that looks like. Now, a couple of things we kind of have rumors about, like China delaying the implementation of their rare earths. We have some rumors that China might be able to get some of the better chips from NVIDIA, perhaps. It was also rumored that Trump might cut down the tariff rate on China, and specifically on fentanyl, which, if I remember correctly, was a 20% tariff. So the headline tariff rate on China might come down. What does that do? That lowers the inflation risk. That lowers the risk of economic harm in America. But we don't know what the actual number might look like. We don't know what the tariff number ultimately on China will look like. Okay, we're expecting a delay of the November 1st tariffs, and although I think most people are expecting that, until it's actually said and announced, you can only price it in so much. So we're going to be getting those headlines soon, and I think they're going to be very much skewed in the Bulls' favor, okay? At this point, I find it hard to believe we're going to get bad news from the Trump and China meeting. Okay, probably really good news. So there's that. That's coming anytime, within hours. Okay, we have earnings that reaffirm that AI is alive and well. Okay, from hyperscalers. And we have a Fed, which gave us a lot of what we, quite honestly, didn't want to hear, that they're data dependent, that we're not guaranteed to get rate cuts. But did anything change? No. In fact, we actually got some really good news. The Fed is ending QT on December 1st, and they're actually going to purchase bonds, a form of QE, with some of the principal, essentially money coming in from mortgage-backed securities. So that was better than expected. Even Jerome Powell said today he doesn't think AI is a bubble. That one most people didn't pay attention to. But the fact of the matter is the Fed doesn't matter anyways. Now, if you've been a viewer of this channel over the past couple of days, I've been talking about a rally coming by the end of this week that triggers a multi-month rally in this market. And that is alive and well, okay? That theory that I've had is alive and well. Now, the reason I've had this theory is partially because Wall Street is really nervous about single stocks, specifically around earnings. That fear even grew today. S&P 500 equal weight VIX is sky high, okay? People are terrified of single stocks right now in the S&P. I imagine that fear in small cap AI is way higher. Like, the fear in small cap stocks right now is at similar levels, I would imagine, as you had back in April when stocks were crashing. Okay. If you look at the VIX EQ, again, it went up like 4.3% today. It's at 44. The high back in April was 70. So you're like 60, 65% of the fear you were at in April, right? Which is crazy. The VIX went up today about 4% or so, 3%, and it's only at 16.92. 0% of the fear relative to the peak of 53 in April. So you have the VIX EQ that is sky high. You have the VIX that is at lows relative, okay? Pretty much unchanged from September and August. Like, no fear relative in the VIX. Sky high fear in the VIX EQ. Okay? Part of this was nervousness heading into big tech earnings. Part of this was the Fed. And part of this is Trump and China meeting. Okay? And the headline risk that could come out there. Well, just getting earnings out of the way, just getting Powell out of the way, and hearing about new tariff rates on China, hearing about the, are things getting better with China? Are they getting worse? Are we going to get a trade deal? Blah, 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 is going to lead to uncertainty coming down and stocks going up. As we talked about for the last couple of days, as volatility is skyrocketing, especially in single stocks, Wall Street shorts the markets, okay? But they're not shorting big tech. They're not shorting the S&P. They're shorting the Russell. They're shorting small caps. So today we heard from the Fed, gave us pretty much what we already knew. Although it sounded bad to hear it initially, it's not something that's going to lead into a downside event, okay? The Fed is just not that important. And we actually got more good things than bad things. But it sounded bad to hear, oh my gosh, the Fed is data dependent. Sometimes they are, sometimes they're not. Some people were expecting the Fed is no longer data dependent, okay? Because that's what they had been kind of suggesting for the last 2 months. Now the Fed says they're data dependent again. And we're not getting a lot of data, so that really throws some uncertainty around Fed policy. But it's clear the Fed is leaving, or Powell is leaving soon. So, how much of a problem is Powell in all reality? Not much, okay? Hyperscaler earnings show that AI is alive and well. They raised AI CapEx budgets, and all things are fine and dandy there, okay? The only piece of real uncertainty we have at this point is Trump China. And once we start to hear what I believe will be really good headlines coming out, that is going to pave the way for stocks to react very, very positively, okay? And really kick off this end of the year rally, especially following what happened today from Jerome Powell. I think Trump, furthermore, wants to surprise markets with good news. And I think that is what is coming within the next couple of hours. Oh, and TLT that sold off today, TLT that sold off 1%. Was down another 0.25% or so in after hours, pushing 10-year Treasury yields back up above 4%, can likely stop the selling probably pretty soon because, again, Trump, we're probably going to hear lower tariff rates on China, which reduces the inflation pressures, which will allow the Fed to continue cutting rates. So I'm not expecting a disaster in the bond market coming either. But we'll see what happens with the Trump headlines that come out in the next couple of hours. Okay, so let's make this make sense. Let's kind of wrap this up before we move on. Okay, what is the current situation? The Fed, although sounded bad to hear they're data dependent, they reaffirmed what we should have already known. If things change, the Fed will change. We shouldn't be certain about anything. Is that new information? No. The Fed started or is stopping quantitative tightening and actually heading into more of a quantitative easing phase, which is historically really good for stocks. So if you wanted to categorize the Fed, it was kind of neutral. Now, just getting the Fed out of the way reduces uncertainty, which can free up potentially some capital to start buying stocks again. But it really depends on Trump and China. So that's number one, the Fed. Hyperscaler earnings, better than expected pretty much across the board, showing AI is alive and well. I'm expecting the same from Amazon and Apple tomorrow in after hours. Then we have Trump and China coming anytime now. And I'm expecting some really good news from that. Maybe even substantially lower tariffs than we think. If China's sitting at a 55% tariff today, assuming the 100% tariff does not go into effect, you might actually see the 20% fentanyl tariff come off. You may get headlines saying that China is at a 30% tariff. That is going to be seen as really good news and really help to ignite this market to the upside. Now, I can only speculate to what the headlines are going to look like, but I'm imagining we're set up for really good news in the coming hours. So, a neutral Powell, good earnings, and likely good news coming from the Trump-China headlines. I would say that's a net positive, okay, for stocks. Now, just getting all of that out of the way relieves uncertainty. Relieving uncertainty is like getting good news in and of itself. And people are very fearful right now. You can see that in volatility in the VIX EQ, which when volatility goes up, as we know, hedge funds, institutions, they short stocks, they sell this market. Volatility is about to collapse, okay, as uncertainty really dies down. And that's going to fuel massive buying pressure in our markets. So even though like the Russell sold off today, you could see it's bouncing in after hours, up 0.13%. It was down 0.85% today. But I'm expecting a massive rally to start soon. Now, probably when we get the headlines from Trump and China, I don't know if that's going to be tonight. I don't know if that's going to be tomorrow morning or tomorrow night, but sometime in the next 12 to 24 hours, we're going to get those headlines, and that's what is really going to move the markets. Now, specifically for Tesla, if you are a Tesla investor, you're probably going to like the fact that Tesla was up 0.21% today. Now, it's down 0.3% in after hours following some of the reactions from big tech. But again, as long as we didn't have a disaster with big tech, as long as they did not say really bad things about AI, like, it's a clearing event, okay? Getting these catalysts out of the way is a clearing event. When we get these catalysts out the way, as we did largely today, that provides the room for upside, okay? Less uncertainty, less hedging needed, less volatility, upside, okay? Now, we're heading into a very historically bullish period as well, the last 10 weeks of the year, which we're technically in right now. On average, leads the S&P to go up 4%. But with all of this good news, which I know it sounds crazy to say good news, how can stocks go down on good news? They do. You've seen that today. Powell didn't explicitly say anything negative, and stocks sold off, okay? Give it a little bit of time. Give it until tomorrow morning to make your assessment, okay? I do, though, think that tomorrow is going to be a really good day for stocks, especially when we get the China-Trump good news. That's going to be really good for Tesla, okay? I think Tesla is going to get closer and closer to that $500 target. From a technical perspective, it looks like Tesla wants to break out from here. And now that we have the clearing event, now that we have the catalyst out of the way largely, again, besides Trump and China, it can allow the stock to start to break out to the upside. But then again, we do have the November 6th meeting, and nothing has really changed there. Wall Street is pretty convinced that the vote is going to pass for Elon's compensation package, but there is going to be some nervousness before that vote does take place. And, after that vote approves Elon's comp package, that's when Tesla is going to make the big move. That's when Tesla could go into the 600s, right? But again, you want to pay attention to the strength today in Tesla. And the strength we've really seen in the last couple of days, people are getting really bullish around Tesla. And if you're a Tesla investor, that is worth taking note of. But again, when I put together all of these events, we're going to see uncertainty collapse, and we are about to see stocks rally. Okay? And I know a lot of people are not going to like that call, but that's the logical call at this point. Okay? Markets just don't always know how to interpret things right away. And, in the next coming hours, once we get the final catalyst, which is Trump and China news, I think it's going to be a lot better than most are expecting. And really kickstart this rally into the end of this year. So hit that like button as well as subscribe to the channel. Let me know how you guys are positioning in this market. Did you go out and buy stocks today? Where are you investing? What stocks are you investing in? Let me know all of that down below in the comment section. Hit the like button as well as subscribe to the channel on your way out, and check that link out down below in the description of this video to come join the trading community as well. Have a great rest of your day, and I will see you in the next one.